Good afternoon. It is Tuesday, the 19th of August, and just going to do a bit of a review from today and go over some setups. There's some pretty cool stuff that played out today, and I felt, at least in this area on NASDAQ, I felt pretty in tune with what was happening, and I caught a few frameworks that fit exactly what I was looking for. It's not all pretty though. The last couple of days, well, Monday and I think on Friday as well, I was trading very, very poorly, and even my top step combine, I actually blew that just this morning. So it's not all super pretty, but there were some cool stuff today, and I want to focus on the stuff that's working, the stuff I did really right, and dial in on that, and then we'll go over the last couple of days at the end of the video. But to start with, I'll go over a bit of NASDAQ and what I caught, but I caught a nice long up using my regular trading hour trailed stops model. Caught a beautiful long, and then I was flexible enough to recognize the SMT on the highs and the bearishness, and then I took a nice short back down to the lows. So I'll go over to an empty chart, and also before that I'll just give a look at the bigger picture and what we are seeing. So we've got NASDAQ in the top left. As you can see, we actually have some nice SMT on the highs. NASDAQ has been making lower highs every day, so I was aware of that, thinking that we are likely to rip back up through those highs. But seeing as we are higher time frame bullish, and we made that SMT with ES making a higher high, it made sense for us to drop back down into this range before potentially continuing higher. And what really stood out to me is also the fact that we have this nice fair value gap that we closed below on this day. We then had multiple runs up into it, failing to get above, looking quite heavy. ES holding up a lot stronger, just looking quite heavy on NASDAQ, and then YM also looking fairly heavy. Well, at least I want to see it take out that low, and then RTY wasn't doing too much. But in general, it was looking bearish to me on the daily time frame. If we look on this time frame here, we can see that there was some very obvious sell side sitting down here. And since Monday, this is Friday, and then Monday opens up right here. Really tight consolidation, not really moving at all, just pressing down into the lows. If I turn on the session breaks, you can see that at 1800, we rated some buy side and then just drifted off into the range. There was the midnight price back here, which I have marked out. Midnight on Monday, we failed to reach. During regular trading hours, when that happens, I see everything from now on as we are in a discount. So even if we went for an entire week, until we reach back up to this price, I consider this to be a discount, which further confirms the narrative of that we're pulling down lower to continue to new all-time highs. That makes sense while we're leaving all these smooth highs at the same time. But in general, it's looking for bearishness because the daily chart suggested it. We had a clear sell side draw, and the chart was clearly compressing. Jumping over to these charts. So we had midnight sitting just here. I always look at midnight to see where we're at as far as premium and discount goes. And I was looking at the regular trading hours as well. So if we open up RTH and drop to the 5 minute. So this is where we closed yesterday, all the way up here. And as you can see today, we actually opened up a lot further down than that. So when that happens, that means I can start looking for my RTH trailed stops framework, which is essentially when we have a large gap. Then I'm looking for us to engineer a high for us to then target for trailed stops. Very simple framework. It's even better if we gap down and then let's say midnight was all the way up here and also 8:30, but it works in any case. So when we sold off at the open like this, I knew that I was looking for a long, And I wasn't just looking for any long, I was looking for us to first engineer a really obvious buy side pull and entice further shorts. So if we drag this across the right, you can see that initially right at 30, made a high and then just tanked super hard. We then start climbing up. So I'm not getting long just yet because we haven't engineered a high for us to target. And then eventually we leave this nice long wick. I really like that because that suggests the narrative that traders might see this as a bearish rejection and think this is a really, strong resistance. And then we drop aggressively low. So we're clearly enticing shorts. Whoever's chasing this drop down here, whoever's sold on this pullback, they're putting their stop loss right here at the moment. Aggressive drop low. And now I was very interested in taking a long. So as I was interested in taking a long, I decided to check what ES was up to. If we compare charts real quick, we can see that ES had just made a higher low, whereas NASDAQ had made a lower low. So that's the first thing that told me, okay, this is beginning to shape up. And then as I was watching, you could see that ES was beginning to show this nice strong order flow, pushing back up. And right here, this is the deal breaker. This is the moment that I knew to get in. We had these long wicks on ES as well, and then a long wick, and then a big down closing candle that created a failure swing. The very next candle ripped straight back up, so showing a lot of strength in ES. At the same time, NASDAQ had printed this long wick as well. We had another long wick just above. That same kind of narrative is up here, aggressively overlapping it with this up closing candle. So I saw this as the entry signal because that combined with the fact we had SMT. So I used this wick, the midpoint of this wick, bought there. Stop loss goes at the base of the wick, so that would be the stop. And then looks to catch that as a long, targeting this buy side. And you can see that worked out quite nicely, had this nice run up. We dropped down, engineered this low. I added to the position here because we have the 80s sitting there. If I mark out, so 80, that's institutional level. Really good spots to accumulate a position below that level. And then we've also got this inversion gap as well. So a few things lining up. I expected this to be a breakaway gap. The reason why is if we drop down to the 15 seconds, so I usually have the 15 second in the bottom left corner, and then usually the 15 up in the right. Another thing to mention real quick, the 5 minute also printed a really long wick, and I've seen that be the case when this framework plays out nicely. A lot of the time there's a really nice long 5 minute wick. If we drop down to 15 here, you can see that this entire range from this high down to this low, that's all very nicely balanced. We have both sell side and buy side delivery throughout the entirety of the range, overlapping multiple times. So I anticipated that we should leave a portion of this fair value gap open, which gave me the confidence to buy it just here. As we dropped down in this area as well, I added, and then I was watching ES. So ES was showing a lot more strength at this point. Obviously we made the higher low, had some nice buy side up here, and ES was showing more strength. I did like the fact that NASDAQ had created this false high at precisely 700 even, the same kind of idea, the 80s down here. You want to, I see these as false support and resistance ideas. So I see it like traders would see us hit the 700s, reject lower, think that, wow, that is a very strong resistance level, let's go short below that, and then we get this run up above. And the same with the 80s. We create a low at 80, everyone thinks it's strong, and they buy on 80, and then we drop below it, and then we accumulate all the stops from whoever bought above. So that's kind of how I see those levels in general. There's a lot of nuance to it as well, but essentially that gave me a bit more of confidence that we were likely to at least take out this high. Also, following this sell-off, we hadn't taken any buy stops, like there were no short-term highs within this range for us to run up and take out. And so the fact that we engineered this high, enticed lower, that gave me the idea that we were likely to at least tap this high. And also long wicks in the 1 minute in this range as well. So that also had the same narrative behind it. But I mentioned I was looking at ES quite closely, and that's because in the past when I've backtested this, I've noticed that, and also live trading, you have to be really careful to watch for SMT. So if one of the assets takes the high, so this is the target, this is where the trailed stops reside for this particular framework. But if one of the assets takes it and the other one doesn't, then that counts as it being hit. Like we can easily reverse from there without us hitting it. And I was aware of that all the way back here. So as ES started rallying and started hitting this high, I was managing risk. I took a partial because we had just hit through here, and I trailed my stops through to this area so that they were at break even, knowing that ES had just taken the high. And then I was just watching price, expecting it to take this high because there's some really obvious buy set up there, but also very hyper aware that we could easily reverse, especially seeing as we're making SMT. So I still wanted to add in this area. I did take some partials out, but then I figured, okay, if I can put some clear structure in that should hold if we're bullish, then I'll go long again. And this is where I did really well today, and I'm really proud of myself for doing this. I was able to be super flexible and not get married to the long bias and targeting this high, even though we clearly never actually took it. So looking at this area in here on the 15 seconds, first of all, we pulled back, made this nice wick at 10.08, and then all of a sudden, just going into 10.09, we drop down, we take it out, and then get an aggressive rip straight back up. This being so close to buy side, and the fact that we had this breakaway below it, I wouldn't want to see this low get taken out, especially with this long wick that we just took out right there. So I expected this low should remain intact and we should keep on pushing high, but also very aware of the SMT. So I bought in this area a couple of times, had stopped below this low, and yeah, I knew that should hold. In this area, we began just consolidating and moving lower. I didn't really like it right here, but I had quite a small size on. I was very comfortable with it, and I just had a nice win. So if it had a run above this high and then sharply rejected, I would have got out. And that's because this is that's once again 20 even. If we had souped above this short-term high into that level and then rapidly rejected, I would have just mitigated. But we didn't, we just rolled down into my stop, which is perfectly fine, and then melted through this gap. Now right here, I was quite confident in this being bearish, and that's because, as I already mentioned, this should remain unfilled, given the circumstance we're in. Also, you can see that we have the SMT on the highs right here, as I mentioned, but on top of that, and this is something that is quite nuanced that ICT actually never taught. Don't even know if he uses it, but when you have SMT going one direction on the lower time frame, you want to find the reverse of that. So Nasdaq showing relative weakness here. When it then shows relative strength on the lower time frame, that indicates like super high quality SMT. Sure, it could also make a lower high and still sell off, but when you get the opposite, and you can see that here with ES making a lower high, there's very quality SMT, and you want to be on side with that. So I recognize that as well. I recognize that we'd had this nice big up close, and then just a really high resistance grind back down towards it before melting below. This happens on a lot of time frames. The 1 hour I love to use it for, but where you have a order block formation with a big candle closure and then a really high resistance grind back down towards that low, To me, that creates a really strong high probability order block, as you can see right here. We also have this inversion fair value gap. And so as we ran back up into here, I was getting short. I actually shorted up here as well. Where did I short? Yeah, so as soon as I got stopped out, I went short immediately because I saw that it was bearish. And if we took out this low, it was going to melt down here. So I already had a short position on from this candle. And then I was adding in this area. And while I was adding, I was looking at this range. For one, we're within this bearish, or this inversion SIBI. I was expecting that we should remain like in this range and below it. And then within the range, I recognized that we had this short-term impulse high. And then one up here as well. So I was allowing for it to potentially reach up for this one, but mainly focused on this one. And I wanted to see if we were able to remain below this and actually reject it lower. And yeah, so how I was doing that, I was wanting to see us fail to really hold above that level. So you can see we wicked through it a few times, ran above it again, but continued to close below it. And then we got this big run up, a close above. And at this point, I was getting a little uneasy, simply because if I was bullish, this would actually be a long entry signal right there. So I was just watching price at this point. Very next candle pulled straight back down, took out this swing low, and then now I'm looking for the same thing we see here, but to the downside. If we can get that, then that would be a short entry signal, which is in alignment with my bias. So I wanted to see us get a closure below the swing low after having broken it. We consolidated a bunch. Then as soon as we got this close here, that was the entry signal I was looking for. I added to the position, tightened my stops from up here down to that most recent swing high just here. So really tight risk. Added to the position, and then caught this beautiful melt low, taking some off as we hit the lows, and as we hit this old low down here, also took a bit off. Then closed out the position down below sell side, and was happy with that. So that's the business there. And I'll show the executions, and then I'll explain in a bit more detail the framework that I used for the long, because it's a pretty insane framework. If I executed it correctly, it would probably, it shows up 3 or 4 times a week at least. So, but yeah, for executions, forgot to mention, I also took a long right to the open. We had a lovely 3-drive pattern, PO3 drive. So I recognize that on the high time frame, if I bring that up to ETH on the 30. So on the 30, you can see we're in a tight range bounds consolidation within this range. Because of that, rather than anticipating a breakout like we got today, it's best just to look to trade from the extremes of the range. We were down here, so right down at the base of the range, and I was expecting that we could easily have a run upwards at the open. I was looking at the swing high as well. I thought that could be a nice target. This was actually 8:30 right there, that candle, and 8:30 ran up with an aggressive wick that souped out this pre-existing swing high, which is a pretty clean reversal signature that usually holds. So that's potentially something I can note for future as to why we didn't reach up to there. But yeah, I was thinking that a long could be ideal, because whoever's chasing this drop down, where are their stops? Well, their stops are above these swing highs. Also, this impulse short-term high. And then ultimately, if we could get up there, it'd be nice. But I saw us open up at 9 a.m. And then we got a PO3 drive pattern, which is a entry model slash yeah, pretty much just the entry model / signature of accumulation, where we, after an hourly open, we then do a 3 drives either above or below the open. In this case, you can see it's below. We have a nice 1, 2, 3. Going into the open as well, so as a lot of the time it's a very nice area to put on a position is during the 850 macro and then going into 920. We then have 3 drives, have a displacement, and start pulling back. And so I bought right here, of a stop loss down inside of this wick. And yeah, we got this beautiful run up. I took partials as we hit this wick. 9:30 then opens up. It's initially dropped down and then ran up and then zigzagged a bunch, but you'll see on my executions how I did there. So there's the longs. The spread is pretty big on this particular account. So price was actually down inside this fair value gap when I bought, but that was my fill. And then running up, took out a bunch at this impulse high, and then took some more out there. And I actually added some as we ran down below these lows, expecting us to run up and take out these highs, but we continued to melt. And this is where I did make a mistake. Well, a mistake, but it was a not an emotional decision, but an impulsive decision. So I bought through here, got stopped out immediately, jumped straight back in, and then got stopped out again. I think these represent my average price. So like this fill would have, like a few of these fills would have actually been higher up, and then a few of these fills lower down. But essentially, I was taken out multiple times, and then right here is my final exit. Left it for a bit, came back just a few minutes later, and decided to try and catch a quick scalp short, which works, but it was kind of lame. Walked away for a bit, came back, and we were setting up that model I was looking for. So as I mentioned, looking for us to engineer that high and tie shorts, and then we got the reversal. Those are my entries using the wick CE, so midpoint of the wick. Climbing up, took some off at the order block, added it back on at the 80s and inside this inversion, added some more as we dropped down into this low once again, held through here, and then I took this one off pretty fast, and that's because I had ES had just ran into its high. I'd added on pretty heavy down here, so probably didn't need to take that off there. It was only 0.03, and I probably had 0.27, so it was only a fraction of my size. But I think I figured that I should at least take something off, like some sort of partial. And then taking a few partials as we ran up into these highs. As we pull back into the fair value gap, and then got that secondary soup on the 15 seconds, I then added, which was a very nice add. It just didn't last very long. I took a bit more off at the highs, seeing as I just added. And then as we rolled over, tried one more long, started not looking too good, and I started recognizing that we're looking short. With SMT, we had a unmet high time frame low just below here, and so as soon as I stopped out, I jumped in short, not as a revenge trade or anything. This was actually me recognizing exactly what I needed to see, so did a good job there. Rolled over lower, took a few partials as we dropped down into the range, and then added. I was feeling a little bit uneasy in here, as I mentioned. Part of the reason was I saw all of these wicks down here, and the fact this is an order block, and I thought, what if we're just dropping in to this order block for reaccumulation before hitting the draw? But then trusting that the high time frame was bearish, and we had fallen short of this sell-side draw, and we had clean SMT on the highs, So I kept on holding. That was my ad as we, right here, as soon as we got that candle closure, jumping in just there, and then covering as we dropped into the lows, and holding a few down a bit lower. So overall, if we go to just NASDAQ for today, NASDAQ made 176 on this challenge account, 5K challenge. Then if we go just gold, you can see that gold was negative 22 plus commissions makes it negative 30 just about. But overall on NASDAQ, it worked out, pretty nicely taking those trades. I'll go over in a bit more detail now. This particular framework. See if I can bring up some more examples as well. We actually had it yesterday as well, but yesterday was possibly one I could go over briefly. So although yesterday was very choppy price action, like on the 15 minute, that looks pretty ugly. But if I drop down to here, you can find, where's 930? Yes, I think it was here yesterday. Oh, this is the 15 second, I see. I thought I didn't recognize it. Cool. So, yesterday, if we go to RTH, you can see that where we closed was, where are we? So that's 930. Yeah, so there we go. So that's RTH. That's where we closed, and then we open with a big gap down. So the gap lower is from there down to there. Quite a major gap. Lower for the open. We also had midnight sitting up here somewhere. We had 8:30 essentially right here, so pretty much where we opened was 8:30. But the main thing is just having that gap lower. So following having that gap lower, what I want to see is us engineer a high, entice shorts, and then target that high. So first we engineer this short-term high, begin dropping lower, but isn't enough to give the narrative that anyone who's short has trailed the stop loss there. We then continue higher, we take out this buy side, and then begin drifting lower. Still not a whole lot of narrative just yet. Make these long wicks and then have this aggressive drop down. So right here, I did actually try a long in this area, which began moving in my direction. I kept on holding, but it fails to take out these highs. So, and then we have this aggressive drop lower. So at this point, you can see that we've clearly engineered this high and these highs with these long wicks. We then dropped lower, entire shorts, ran up, but we failed to take out these highs. At the same time, if we check on ES, there was SMT, so that's potentially, if I was long here, I could see that and know to get out there. But after we dropped lower, then I saw that, okay, this is now what I was looking for. We then get a very similar situation to yesterday. There's some highs, we have this long wick. The next candle drops down, takes out that previous candle low, and then aggressively closes back up. So then looking at the midpoint of that wick, can use that as an entry and to manage risk of a stop loss at that wick low. So I bought just there. Runs up a bit, consolidates, very similar to today. A sharp drop down, we run up and then engineer a high for people to trail their stops to, and then drops down a bit, and then eventually we get that nice move up, hitting our buy side target of this high. So it's a very simple framework, but it gives you something specific to look for, rather than just coming into the day and thinking, okay, I'm going to buy, actually maybe it's a short, okay, maybe it's a long, maybe it's a short down here. Okay, I'm going to sell the pullback. Rather than doing that, you know that you're waiting for us to engineer a high and for the narrative to form that anyone who is short has now trailed their stop loss to a specific high. And I really like this situation here because we have this very obvious impulsive buy side pull, impulsive high, which tend to be targeted really well. And then a sharp drop low, a bunch of time spent down at a deep discount, and before an aggressive push back up towards this high. If we get this aggressive push back up through this high, we didn't just come up here to reach near to this high. Like we came up here to hit some liquidity. There is no liquidity, or no specific pool of liquidity above a high or low inside of this big gap. If we had only been wanting to come up to not take out this high, we would have likely just taken out this high and then rejected from there. However, we pushed up past that. That's immediately telling you, okay, where do we want to go? It's likely this high is here. And yeah, that ended up working out really well. I can keep going back and find more examples of this because it really does happen a lot. In this case here, this one didn't particularly happen, and that's simply because we opened up at a short-term premium, but then instantly dropped straight away and then just kept on pushing low. So retail, like any retail longs, weren't really given a chance to trail the stop below any lows, and if they did, I suppose you could say these lows, which did end up getting hit. This is a beautiful example as well. So opening up with a big gap low, we start climbing straight away. We haven't engineered, still waiting for us to engineer a high and then entice shorts. So nothing yet. Engineers a high, sharp drop low. So that's enticing the shorts. We then began to run higher and then fail, consolidate, drift low into the range, drop low this impulse low, and then get this nice push up, falling just short, dropping down to reaccumulate, and then running up. If you look at the 5-minute chart, this is a very long 5-minute wick, also making these equal highs. So using different time frames, you can see the narrative like that. Then similar thing here where we engineer this low, consolidate, drop down, we do take it out briefly, and then get this failure swing, a low time frame bull flag, then a aggressive drop back through this low. So that offered a beautiful short as well. It's just a really simple way to have a framework. Let's see. That's all I want to go over for NASDAQ today. I do want to go over some gold trades as well. If we go over to gold for today, let's see, I've taken a few trades. Let's see. So initially I was taking a short in this area. I have to look at TradingView to see what exactly I was looking at. Yeah, took a few shorts in here. None of them works. Definitely could have had some more specific risk management in this range. As you can see, I sold there, stopped out, sold straight away, and then got stopped out of the high. Then got short just in this area. Was fairly confident, so I was able to hold it through all of this, and then took some partials as it began dropping into my targets. It fell short of my main targets. So as we pull back up into the range, I got short again. My main target was a original consolidation just down here. Turns out this was actually just first stage accumulation of this market maker sell model. So yeah, got some more shorts, got stopped out. Ran up into 15-minute CIBI. I got short up there, however, using a wider stop loss, but it wasn't really my model. So I took it off at an easy target, that short-term low. And then I thought, okay, well, rather than getting short up here, sure, I do think it will turn around, but I need a very specific framework to use. And so I let this one go. And then I got a really nice entry model just in here, and that's what I caught. Covered way too fast. That's the tricky thing with gold. It's like if you're not 100% right on the timing and the target and the high time frame bias and everything, then gold might make a really nice move and then can quickly overlap it and come straight back up. In which case it can pay to take your money really fast. But then if you are right on the high time frame target and bias, then you end up getting these really big moves. And if you took it off really fast, then it doesn't really help. But also, this is 8 a.m. Right at 8 a.m, Trump was speaking. So if I'd seen the news, I probably would have had the confidence to hold. But I didn't check Forex Factory beforehand. But yeah, it hits my original consolidation down here, and then my lower time frame targets, or the high time frame targets, the previous day low, then expecting it to continue melting lower down to around 310, so another 10 points away from here. But what I'm going to be going over is simply going to be this short, and what I saw, I can explain it here and then I'll go to TradingView. But essentially I was, bearish as I mentioned. We had been selling off, engineered this long 15-minute wick, pull back into the range. Looking at this impulse high, you see that we ran above that, rejected it. And what I'm looking for is for us to, with impulse highs, if we continue pushing through them aggressively, that shows you that we're actually bullish. Otherwise, when we hit them, we're likely to reject from them. They make a really good turtle soup. So we had initially wicked up through it, saying, okay, is this going to close above or are we going to drop down? And then we get this next candle. Now this next candle ran up. It closed above the midpoint of this wick. As you can tell from my previous trade on NASDAQ, that's actually a long signal. That's actually a bullish signal. But there's a caveat to that. If we have a PD array such as this wick, and then we get a closure on a candle that disrespects the PD array to in the sense that if I'm bullish, this should invalidate bearishness and be a bullish signal. If I'm bearish, we should not close above this line. But when we do close above that line and then the very next candle rejects aggressively, that's what I call the manipulation closure, which is a signal and also an entry technique that I can use. And I don't often recognize them real time. It's usually just in hindsight. But in this particular case, I was expecting bearishness. I recognized that real time. Very next candle slammed straight down. I saw that we just had this impulse rejection, manipulation closure. And so I trusted it. I jumped in short with full size. Full size on this account is 2 times 0.14 XAU, and that puts on full margin. And yeah, that's began rolling over really nicely. Took a few partials in here, and the reason I didn't fully hold is partly because we had this swing high that I was hoping we'd run up and take that out aggressively and then drop straight away. We didn't. We just kept on rolling over, consolidating, and then when this candle opened, ran up, and then began trading lower, I figured, okay, if it's going to take out this low, it has to go down now. Otherwise, it's probably going to run back up into the range. And because the spread was reasonably big, like if I draw a box showing what the spread's like, it's about that. So like if I wanted to allow for us to come above this high, then I need to have my stop loss not just there, but more like about up here. So, which is worse than break even. I didn't really want to sit through all of that. So as we push down towards this low, I figured I'd trail my stop down quite a bit to about this area, and then we had this wick up and began breaking lower, and by then I just closed out the position right at 8 a.m. Let's see if I can find what the time is on this candle. Don't know how to do it, but yeah, pretty much at 8 a.m. that's when Trump spoke, and then we had this beautiful melt low. There was also a short right here that I should have taken. I say that, but I'm still working on this entry model. It is a really cool model, but I'm not super familiar with how to use it just yet. I'll go over that right now, actually, and then I'll go back to that trade I just talked about. So that's too messy. Jump over to gold on this chart instead. So gold, I'm going to put the 1 hour on the left. Cool, so if I bring up the session breaks, we can now see where each day ended, each daily candle closed and then opened. And this is a way I found of using new day and new week opening gaps that helps you focus on the right ones and avoids the ones that are irrelevant. Well, not irrelevant, but less potent. What I look for is, did we just raid a previous day high or previous day low? As you can see, we just took out this PDH. So the Friday previous day high was run on Monday. So after we do that, I then want to use, we also ran the previous day low, but then I want to use the new day opening gap of the previous day high or low that we just ran. And that becomes my point of interest. Indog VIP is what I've been labeling it. And how you use it is, if I'm bearish, I want to see us accumulate above that level. And then once we break below it, after having accumulated clearly above that level, you can use it as resistance to go short. Now let's see how that looks on the lower time frame. This is the range that we had. This is also a really long 4-hour wick, by the way. This is the 1 hour chart on the 4 hour, really long 4-hour wick, then a gap. We roll over, down, come to a deep discount of this gap, this long wick. Same kind of narrative. Anyone who's bullish, they think this is a strong bullish rejection. They will want to buy in this area, and we are bearish, and so it's a great place to be accumulating a short position. So from this low up to this high, you can see that is EQ, which we hit. And we obviously ran out this premium internal range liquidity, hit this 15-minute SIBI, which I mentioned earlier, and began rolling over. And keep dropping down the time frames. So this is the area that I was looking for that short that I said I should have taken. And the reason I didn't was, one, we had just hit all of this sell side here. We had also just hit these smooth lows down here as well. We're just about to actually. Well, we had actually just hit it, yeah. And so it just didn't seem like, I thought, okay, well, if I'm going to take this trade, maybe I should wait for us to come down to it like this, and then maybe from here we run up, take out a high, and then come below, and then that would be a short. But I thought, because we've just been moving in one direction already, I didn't feel as comfortable, you know, just jumping in there and going short. And that turns out that that's kind of what happened. But if we look on the 1 minute time frame, I think I could justify why I could have actually taken this short entry. So here's the lovely 1 minute. And so I'll go down a few time frames on this chart as well. 15 minutes, you can see that we had an up closing candle, put in a fairly long wick. Then on the 5 minutes, yeah, so on the 15 and 5, nothing particularly jumps out at me. Obviously, we did have an up closing candle, but we also, we've just hit all the sell side. But the reason why I could have justified taking this trade is, for one, we had this enticing up move here. Spent a bunch of time up here as well. So whoever is trying to go long in this drop lower, they want to get long right here. So when we drop back down after spending so much time at a premium, we now have traps longs up here. We can also anticipate that this most recent down closing range should act as a breaker block / mitigation block. You can see us remaining below that quite nicely. But other than all that, that's just to say that the narrative is that we have trapped longs up here. Price won't want to let them out of the position. It wants to go for their stops. The next thing is, the whole premise for using this as an entry is when we are bearish and we have clearly accumulated above it beforehand. So on the high time frame, obviously equal highs up here, we ran that out, then traded lower. So we have accumulated a premium buy side while we are bearish. So that's good on the high time frame. But as I mentioned, we just had this big down move. I didn't know, did we need to come back up to reaccumulate? It turns out I could have just used this. The narrative of us having traps longs, so we're likely to remain below this area. And then on the low time frame, do we get accumulation of buy side on the low time frame right next to this level? And you can see right here we have this buy side sitting up here. We run above it, rejects lower, so now we have accumulated all this buy side. This becomes an intermediate term high. We then get back below this new day opening gap, VIP, whatever I want to call it. And now I have a clear way to frame risk. I can now put my stop loss above the intermediate term high, which will not get taken out if we are to remain bearish. And if we have accumulated above this level, it should not get taken out. And now when we bump up against this new day opening gap, I can jump in short along here, stop loss at the high, and that would have worked really nicely. So I think in future I want to be a bit more confident in taking these setups when I can see clear accumulation, which on the high time frame we had all this premium buy side clearly sold up there. A lot of nice targets down here after having spent the entire day enticing longs with these big green up closing ranges. So expecting we're likely to melt lower. And then also on the low time frame, we have the narrative of that 15-minute long wick right here that enticed longs. The same thing here with this rally up enticing and then trapping traders long with this consolidation. And then when we do get down to the level, if I can justify it with any kind of lower time frame accumulation of shorts as well, which we get right here, running out, accumulating shorts above this high, dropping back below. When I have all of that in place and it's a very clear new day opening gap I want to use, being that we're just taking out this previous day high, delete all that. We're just taking out the previous day high and then drop back below it. So I did really like that as a level. You can see I could have got short there. And if we look over to the right as well, you could possibly say the same thing over here as well, where after the sell-off, we ran up, we took out these impulse highs, and then drop back into the range. Kind of just trying to work out how I would have traded this. It's consolidating above the 10 a.m. open, really. So being held at a premium, eventually dropping very aggressively. We now have traps longs above the 10 a.m. open, long wick as well. So anticipating this to remain open as a breakaway because this is also a balanced price range. in here. So I could have shorted on the break low if I was confident to do so. Maybe you could have seen this as the high was put in, and that we could actually accumulate a short in here as well. But yeah, it doesn't stand out to me as a super easy trade. I am back. Just had to have a quick breather. I felt like I was talking at 100 miles an hour and a bit out of breath. But I'll finish up with this and then go over onto stats and talk about the last few days. This is that short that I mentioned. That long wick. This is the impulse high I was looking at. And you can see that we ran above it once, began rejecting. The very next candle ran up, closed above it, but at the same time closed above the midpoint of this wick. The very next candle instantly rejected low. That was my entry signal. Ends up to be a beautiful short. Just out of curiosity, I'll look at that on the 15 seconds. Love to see exactly what happened right there. How was that candle close? So yeah, if you use this as the swing high, you can see that or the swing low that made the high. You can see we took it out, then had the failure swing and aggressive drop back down. That could have also been the exact same kind of entry signal, and then that just rolled over really nicely. Did take out some internal range just here, so you could have seen that as cool. This should now hold, but yeah, you could also the reason I got out is because it could have easily run up like that, come straight back down, and then it would have still been a perfectly fine short. I didn't want to have my stop loss sitting way up here above my entry price down here in case that happened. So I ended up just closing out the trade as we hit the lows. Now on to top step. Also, yeah, this account is now back above 5k. It was in like $200 drawdown just about. So good to get it back at 5k. Ineligible for funding, that was today. Hit max loss limit, that's what it was. So I wasn't quite at the maximum daily loss. That was a winning trade that it hit it on. I can't remember exactly what one. It was on gold. If we look at gold and hit it back. So there's ours right there at 85.1. So right there is where we hit the maximum loss limit on our short position, and then it sold off. But to be fair, it wasn't trading the best the last few days, so it makes sense why it didn't quite work. You can see I went short as we ran up into this range, got stopped out right at these highs, then jumped in short here and held that, took a few partials. What do we have here? I tried adding just here. So as we had this sell off here, that's all cool. I'm going to add, and for the add, so there's these 7 contracts. I'm going to put, so there's 7 contracts that are there, and there's 5 and 2. I'm going to put a stop loss for 7 contracts just here. They got taken out, so that's all good. Back to the size I had before. Continue trading higher. My stop loss was sitting above the swing high, which it looks like I got taps there. I actually had the stop sitting about here because I recognize that on the futures contracts, it doesn't respect market structure at all. It just goes wherever. But I was watching the XAU USD and stop loss above that swing high, which was safe, and then added to it, and then it hits the maximum drawdown by just $50 past it. I didn't realize and got stopped out. Otherwise, that could have, been a nice drop low. Made it a green day. But that's all good. I have been trading like pretty shittily last couple of days, as you can see. That's Monday and that's Friday. This day on Friday, Monday, sorry. Very interesting for me to look back at, because I actually, it was screaming at me to go short all the way through here, and I was just stuck on the longs and just not accepting that it was a short. Just ignoring a few things that really stood out. I did a nice breakdown of this, nice journal entry where I recognized all the things that stood out to me that were literally my model was a short model in here. But I was just trying to go long. If we look at stats real quick for this account, if we go last month, you can see the overall, which is obviously pretty bad. Only 3 green days. So it's one thing. There'll be a ridiculous amount of trades. Total. So you can see putting up a lot of numbers equity wise, a lot of volume going through. It's because I've been doing slightly more leveraged trades, but I have been over trading like anything as well, and not really proud. Part of the reason I didn't do a review on Monday and Friday is I just wasn't really didn't feel like it. I just didn't have much to talk about, and all I knew was that I just had traded badly, and you can see it on my equity curve throughout the day. Way too many different separate points. Have that breakthrough there, and then rolling over as well. And then on Friday, sure, it looks like, a cool recovery, but if you look at how many different points there are, it's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Every one of those represents a partial profit taken or an entirely different trade or something. And it just adds up to way too much. But in general, with this combine, it just hasn't gone how I expected. I was thinking that, okay, I'm going to be really disciplined. I'm going to, just be taking a couple of trades. I'm going to be very specific of what I'm looking for. I'm going to look for these particular frameworks I have in my playbook. I'm only going to execute on those. And when I execute on them, I'm going to put on size. And when it says 51 trades, it's probably more like 7 or 8. If that. Obviously 90 trades is going to be a lot of trades, and probably tilted. But in general, if it's anything below 50, I'd say, that's pretty normal trading for me, because every partial counts as a trade. But when you get things, like 90 trades, 60 trades, it still is too much executing. Ideally, I'd like to get it to the point where I'm just taking very few trades. I'm taking maybe 3 partials per trade, like 3 separate times. So partial 1, partial 2, and then full TP. And so and only taking 2 to 3 trades like that per day. So really, it should remain below 15 on the number of partials taken altogether. This day here, I thought I was on the practice account, and I took 2 trades, and it turned out that I wasn't on the practice account, and I hit the personal daily loss limit. But that's what happened just there. But in general, this isn't what I was wanting. I was thinking it should be a lot less trades, and a lot more specific, and I just fell into just a few bad habits straight away. So yeah, going to be looking to change a few things and be very specific of what I'm changing on the next combine as well. That was the short that I should have been a part of. Yeah, got short, and then got stopped out. No, mitigated. Started dropping lows. Actually, maybe, you know what? Maybe it is going to go down. So I got short again. Immediately stopped out. It's like, oh well. And then I think this was PPI. I delivered. This was another RTH trailed stops model long that I didn't execute properly, and I got stopped out beautifully right at 26.5, which is there. So that was my stop out. I put my stop loss below this candle low. This is that same thing that I took on gold today, where we have manipulation closure. So we have this swing low, impulse low, we work through it once, and then we get this close below. But when we close below, it immediately rejects straight back up with an aggressive candle. I saw that as my entry signal for the long. So jumped in long, decided, okay, well, if we get this aggressive move, then I don't want to see it come back below that candle. It turns out I should have my stop loss below the actual swing low. I might have already gone over this. Actually, I don't even know what day the 14th was. I don't know. Might have been Thursday or something. But in any case, you can see that if I hide all drawings, this was probably Friday here. But yeah, not... what even happened up here? That's right. On this day, so first of all, I was very bearish up here, and then I sold, and then I just chickened out because I just sold gold here as well at the same kind of area. And when I got, and then gold came right up to where my stop loss would be. My stop loss was at ERL. It came really close and then started moving lower, and so I mitigated. And then that turned out to be the high of day on gold. So I missed that trade and I was pissed off at that. And then at the same time, we were pulling back into here. I thought, cool, this is my model. We've got the impulse high rejection. We have SMT. We're pulling back for this internal range. We get short. And then I saw, oh, actually, we just hit midnight with this drop down. Maybe it's not a short after all, so I got out. Still bearish through here. But then I figured after this news release, we're likely to run up into the 20s, which is just here. Well, it's all explained with all these notes. So I was looking for longs, took a few longs in here, and then I started trying to trail my stop up. Every time I trail my stop, it would come down, stop me out, and then it would offer another entry, so I'd get back in, and then I'd try and have my stop loss really close. The whole thesis of this trade was that we are more likely to go to the 20s than we are to take the lows first, despite being bearish in the high time frame. So I ended up taking a few stop outs, trying to get long. Eventually, we ran up here. I got short, and then as soon as I got short, I second guessed it, even though I was very, very bearish high time frame, all these lows down here. Second guessed it straight away, and then we sold off. Hide all the stuff. And then in this area, chasing this drop low, this news candle, which was, a bit silly. Then in this area, this was a cool trade. I recognized right here, we're very bullish, same kind of idea where buy stops are above this high, aggressive displacement towards it. I know it's going there. So I caught a nice scalp long. Tried to buy on this pullback, got stopped out quite quickly. And at that point, I recognized, cool, we are still bearish. We are beginning to show bearish order flow. I recognize that bearish order flow in this area. We've got a 3-minute impulse reject failure right here with this M2 and this the M3. So this swing low, M3 closed below it, pulled it back above a short-term high on the internal range, and I was getting in short just there and caught a beautiful short down. Then finally, deep discount to the range and after 11, so I shouldn't have added here. But I'm still glad I did, just because I was able to put on really, really high leverage with managed risk, correctly managed risk, using some low time frame 15-second frameworks. Got in short. I think I had like 15 micros on at this point, risking less than $100 or so. And then they ended up coming back up. So I'd love to be able to get really good at doing that, at putting on very high leverage positions with a lot of size, with very tight risk, because I am able to do that in specific certain circumstances. But I have to be careful when and where I do it. So in this particular case, you can see that within this dealing range from this high down to the low, we are clearly below EQ, so at a deep discount of it. So that's the first thing against us. If it was the right time of day, that wouldn't be such a problem. Like if this was at 9:30, or like a very volatile time, then maybe it would just melt lower. But yeah, it's after 11 as well. So that's 11 a.m. right there. It's after 11 where we're likely to get more high resistance, be more consolidatory, and any move that has been underway is likely to slow down. It's not the time to be shorting in a discount of the range, or likely trying to get in with extra size. If I want to put on mad size, I need to do it somewhere like this, like right after the open. Maybe I'd find a model in here, be able to add in with big size. But somewhere where it's likely to make a fast move, that's where you want to have size on with tight risk. But I still did a great job with putting on the size when I saw my model, and it just didn't continue pushing lower, but I had heaps of size on and had a lot of potential. If I'm able to get myself positioned with a lot of size in an appropriate manner, and then I catch something like this, then that could make be like a 10-hour move or something. So that's what I'm trying to work on getting towards. I don't even know what days all these are that I'm going over. I'm just kind of looking back over my trading. This looks like it was before I even started the combine back here. One, two, three. I don't know. Maybe not. Maybe it's just not loading all the trades. I've been focusing on goals the mostly. It's not loading. Yeah, oh well, I'll leave that for now. Current mission is to only trade this on gold. So I have two of these accounts. These 5Ks, both are the same place at the 5K mark. I definitely want to make sure that one of them is used only for gold and not for NASDAQ at all. But I still want to be able to trade NASDAQ when I do have a very specific trade that I want to take, such as the RTH trail stops model, such as we had today. Like if we have that long, like I saw today, that fits exactly my framework that I'm looking for, then I want to be able to take it on something. But the issue comes is when if I overtrade, which can easily happen on NASDAQ more so than any other asset. I think a lot of people experience that. Like NASDAQ can easily have you, switching your bias multiple times or wanting to, you have a nice run up and a nice run down, which you can catch both if you want. But there's a lot of flipping backwards and forwards, whereas something like gold, you are more likely to have a very specific bias and framework of how you're going to get there. Like, cool, we're going to a premium internal and now we're going lower. And that's essentially it. Whereas in NASDAQ, it's like, okay, we're just taking out these lows to then run up into internal range, or what's the go? So on NASDAQ, I just have to be very specific of what framework I'm looking for and only trade those frameworks, which is difficult for me to do, it seems. So if I can do that, then I can trade NASDAQ on one of these accounts, which clearly, like with just today, just on NASDAQ, I'm up 176, which is, it's pretty good for a an account with 400 drawdown all up. But I just have to make sure that I'm only trading these things that actually make sense and not stuff like this. Like, I don't know what all that is. Even this, that was more a guess than anything. It's not really a framework. It's more like, oh yeah, I can kind of see why we would go up from here. We've got the PO3 drive, and this is a nice looking entry. I can see the buy side, but it's not a very specific framework, and that isn't scalable. I only want to be doing things that I can, be very confident in and have convictions that I can put on real size. In an area like this, I'm able to put on real size because I'm very confident in it. Yeah, that'll do for this review. Just as a quick bonus, I thought I'd hop back on and mention this that I've been looking at. So this is the alert that I just received. INQ crossing a certain level. That's just a random stock that I found that looks interesting, and the chart kind of jumped out at me as being interesting. I did a few markups on it. If I hide everything real quick, we can have a quick look. So previous all-time highs right there, drag that across. You can see we actually made some lows just above it. We have all the sell side below all here. We recently dropped down, accumulated all that sell side, had an aggressive rally back up. If we drop to the 24-hour, we'll be able to see a bit more clearly. Computer's slow. So things to note is that, one, we've just accumulated all of the sell side below this big swing low. Had this move up, we have this previous all-time high, which I've marked out with the green line. And you can see that we actually retested that beautifully, creating this idea of false support. We ran up with this aggressive impulsive rally. There's sell side below that impulse low. There's sell sides just in this area. We are bullish, higher time frame clearly. And one of the things that I really like as well is, one, we have the delirium framework, which is where we have relative equal highs just below a impulse high. So what I want to see is us run through these highs but not stop, keep going up. The idea is that people went short with their stops above this resistance level, and people who are really smart put their stop a little bit further up in case price wicks above and goes back down. And so rather than wicking up, because people want to see, oh, maybe it's just going to do that, but rather than do that, it'll go that and then just rip straight into this high. The next thing that stood out to me, other than the fact we'd accumulated down here already, we have this really obvious looking sell side, and then we have this kind of bull flag formation, sell side down here, buy side, smooth highs, and then we've got the 50s. Institutional levels, like big figure, psychological, whatever you want to call them, tends to be magnets for price, especially in stocks, and we didn't just come up so close to it to not reach it. So I really liked the idea of that. The facts that we didn't quite reach it is actually confidence of us coming back up there. And so I just did a markup thinking, okay, it'll be cool if we drop down into this area below this impulse low. It'd be a good place to buy. Below that, looking for some, whole figure numbers, 32. Between 32 and 30 could be a really nice area to buy. Like in this area, it'd be your golden zone. And then it could come down as far as 26.69. That'll allow us to come back below this this trailed old low, which is basically when we have a big aggressive move, we engineer an obvious swing low for trailed stops to be taken. Then when we get back above that level, it can offer a very nice entry area. Then high time frame invalidation would essentially be down here, which is below the midpoint of this accumulation range, and also below this weekly swing low, which is the only weekly swing low within this entire run up. So allowing for it to drop down there if it wanted to. So that's the idea. I don't know if I'll buy it or not, so I don't have the funds to. I might buy a share just for fun. But if we look at, let's say you had to enter at exactly 32, and put your stop down there. And that's 1.6 up to there. Likely you'd want to see it come at least up to there. So 2R and then potential to go further. But I think it's pretty high probability. It's a small cap stock. But just the way this chart's set up is telling me that we accumulated down here. We have people who have been buying up in this area and their stops are in this area here. So there's a lot of sell side down here for an institution to accumulate should it want to. On top of that, this is in RTY, and if we look at RTY real quick, I can't remember the exact percentage, but it's probably like 1.5% of RTY or 1% or something. So like a reasonable amount, especially with the 2,000 stocks in RTY. And RTY is clearly incredibly bullish in the high time frame. If you look at the weekly or the monthly, like massive wicks that we left unfilled, so showing a lot of strength, smooth highs up here, smooth highs up to all-time highs, not all-time highs, but up to here, and then way back here you can see a lot more reason for us to go higher to the all-time high. So looking for strength in here, this is the strongest of the indices as well. So IonQ could be interesting. And the last thing I'll mention is just what I'm looking for on gold. Previous week low, that's long. If we don't get a long from previous week low, if we don't drop down here and then rip straight back up, then we're going down here. And if we go down here, then this is a beautiful area to buy. Anywhere below these previous week lows, anticipating that we shouldn't take out the swing low. Beautiful place to accumulate a high time frame swing position long. But this area as well, we are within this consolidating range. If we are bullish, then this will be a beautiful place to go long from at 310, and that's what I'm expecting on gold. But just thought I'd mention those two things as a little bonus of what I'm looking for. But yeah,